Hello guys, so I hope you guys are doing amazing. This is George and welcome to my YouTube channel. If you're a returning subscriber, I hope you learned from my last video, and this one is also going to be beneficial. If you're new here, make sure to like, follow, share, comment and subscribe to this particular YouTube channel so that you get updates anytime we post and you learn from our posts. Okay, so today I want us to go through this particular trade that I took yesterday. That was on Friday, the 25th of April. So that it's just a trade breakdown so that you see any other time you see such a setup, you can be able to take it. Of course, this is a model I've taught previously on my TikTok, and I've said this severally that I will do a very detailed video. Not this one is not going to be as detailed, but I hope you learn from this particular video. So basically, what the concept behind this is understanding the three major sessions that we're going to be trading. Specifically, we're going to be trading two major sessions, so that is the Asian session and the London session. Of course, there are three major sessions. There is the Asian session, which basically covers the Sydney and the Tokyo, and then we have the London and then the New York session. Those three sessions are very important for this particular model. So here, the first thing is you have to understand when the Asian session is starting and when the London session is starting and when the New York session is starting. But then we are not going to be taking any trade on the New York for this particular day, but I will teach you later on how to trade the same model during the New York session. Yeah, so basically we are trading the Asian range or the Asian liquidity that's created during the Asian session. As we all know, during the Asian session there is no enough volume in the market, so there's no basically we can't see a lot of momentum in the market. So ideally it means that we are creating liquidity, because anytime, I've said this again and again, that anytime the market is accumulating, what it's doing is it's creating liquidity for us. So basically this is a sample model that of what you're going to be trading. So first of all is we are expecting to see an accumulation, basically a choppy market or a ranging market during the Asian session, and then during the London session we're expecting to see a breakout. Okay, we're expecting to see price trade or give us a clear direction during the London session, and then during the New York session you might be expecting to see reversals. Okay, so basically what I mean is that this is going to be our Asian session, and then this is going to be our London session. This one is going to be our London session, and then this is going to be our New York session. I have not said this is how it's going to look like every other day. I'm just saying that most of the times this is how you're going to be seeing the market look like. Not specifically like this. Like, what I mean is during the Asian session you're going to be expecting a range, right? And then during the London session you're going to be expecting price to take a specific direction, and then mostly the New York is usually goes the opposite direction of what London did. So that is why I've had New York look like that. So that is how it looks like most of the times. Okay, yeah, so the Asian session will create I've said this is the Asian session, right? Yeah, this Asian session will create for us a range, or basically creating for us liquidity, right? We are going to be having a high and a low that price is going to give us, and then the London is going to give us a clear direction, and then the New York is also going to have a lot of momentum. Okay, basically that's what you're going to be trading. But now you have to be able to also identify liquidity. I did a video last time talking about liquidity. You can go check it out if you don't understand things to do with liquidity before you come back here. So basically what you have to do is, what you're going to be marking is on the Asian sessions we're going to be looking for the high and the low. Okay, so let's say this is where the Asian session is ending right now. By the way, the Asian session ends at 9 and London starts at 9. Okay, so basically you'll be marking from midnight. So this line is going to be your midnight 000, and this one is going to be your 9 a.m. Remember, this is Kenyan time, or UTC +3. So whenever you are changing that time to the time of your country, or you can just use UTC +3 so that you don't get confused. So midnight and 9 a.m. Okay, and then what you're going to be doing is we're going to be marking the lowest point that will be the low and the high. So this happens to be our low, and then this happens to be our high. Okay, so this is a basic model that you will be trading for this particular case. And then it means that now you will be waiting for price to take out either of these, and then you take a trade to the opposite one. So let's say, for instance, price decides after when London starts, price starts selling. Okay, and then it takes out this low, and then what you have to wait for is price to close inside of the range. So once price closes inside of the range, now you'll go down to a lower time frame. Remember, by this time you are on the 15 minutes time frame. You'll go down to a lower time frames like the 15 minutes or the 5 minutes, and then mark what? Mark a fair value gap that you will see there. Okay, now from that fair value gap, that is where you'll be taking your trade off from. You'll take your trade off that fair value gap, and then have your stop loss, of course, the candle that gives you your fair value gap at the low of that candle, and then have your target or your take profit at the end of the Asian session. So that is the first way and the easiest way. The second one, of course, for the target, you can always have your target at the previous day. Let's say the previous day high is around here. You can take your profits here and then also wait for hold some more positions too that previous day high. Okay, yeah, you choose your target, choose how you want to make your money, basically. Yeah. And then the second way, or this is the first way, the second way is when the low, or the low that you're marking, when the low that you're marking has a long lower wick. Let's say here the candle that is here is looking like this. Let's just say that that candle is looking like this. It has a long wick, okay, on the lower side. Now there's something we call a liquidity pool, and I've talked about this severally, and I think basically only my students, I think, I'm not sure, but I think I've taught my students a lot. So now what happens is you'll mark this week, the week alone, and then one secret is you will not expect price to ever get there. Okay, so this is basically we're going to call it a liquidity pool. Okay, price will never ever get to this, to the lowest point hapa hivi chini kabisa wakati kuna liquidity pool. Sorry, sorry for the Swahili, for those guys who don't understand. What I'm saying is price will not get to this low when there is a long wick. Basically, when there's a long wick, it means that is a liquidity pool. Okay, yeah, these are things I've learned from the market, so I'm just telling you, I've traded this model for a year plus, since 2023 October to now. So yeah, so when you're having this kind of scenario, you do not expect price to get to this particular, to this low completely. Price will always get here and then start buying. Okay, so price will always just get inside the liquidity pool, and then that's it. So you'll wait for price. Once price gets in the liquidity pool and gets back to the range, you look for a fair value gap inside of the range, and then take a trade from there. Are we together? Yeah, I hope we are together up to that point. So that is how it is to trade this particular model. It's not as hard, and there's nothing technical or so hard that you have to there's no rocket science. In short, there's completely no rocket science. Now let's go back to this particular trade that we had yesterday. So first is we're gonna be cutting out prices. Let's say we cut out prices to 7 a.m. Let's say you woke up at 7 and you want to get on your charts from 7. So what you're gonna do is we have to control, and I want to delete all these things from my chart first so that I have a clean chart. I don't know why. Okay, better. So that's what you're having when you wake up in the morning. So what you do, I've told you, is you will mark the 12 a.m. midnight. Okay, so at 12 a.m. midnight open is around here, so you'll just have a horizontal line there, and then you'll have another line at 9. Okay, because now that is when the Asian session is ending, or is coming to an end, and the London is starting. And then of course now what you're gonna do is you are gonna have to wait for prices. You're gonna have to wait for price to get to the 9 a.m. and then now we'll see. Now once we're at 9 a.m., you can see this is our exactly 9 a.m. line, and it means that for this particular case, you see they clearly this is the high we're having here, and then this is the low we're having here. Okay, yeah, and I told you this is now the kind of scenario I've explained lastly before I finished, that we are having this long lower week. Okay, when you're having this long lower week, you cannot expect price to get to this particular point. Okay, so you'll wait for just once price gets inside of the liquidity pool, then you'll say the Asian liquidity has been swept. Okay, so ideally here now what you'll be doing is remember this is a sweep, it's exactly 9, so it's already price has already taken grab the liquidity. So next thing you will be doing is now you will be marking a fair value gap inside of the range, and the closest fair value gap here we having is this particular one here. So from this fair value gap, we'll be expecting to take buy orders from here. By the way, I took this buy order and I also had shared it with my community, this limit order. Yeah, I think I'll attach a few results of my students and the guys who are on my channel that made money off from the same. So this is what now you'll be expecting price to get inside of this particular fair value gap. You'll take a trade from this fair value gap and target whichever the high. Now I'm also going to explain to you what happens. So when price has not when we have not taken out this low and we're taking a trade from a fair value gap, I want you to also target another fair value gap. Okay, yeah, I think I explained this on my previous video that when you're taking a trade from a fair value gap, I want you to target the opposing fair value gap. When you're taking a trade from a supply, target a demand. When you're taking a trade from maybe a support, target a resistance. And that and that and that. When you're taking a trade from these Asian low, target the Asian high. But then the Asian low had not been swept, so we have to target what? A fair value gap, because we took a trade from a fair value gap. I don't know if you guys have understood that. You can comment down. Yeah, so before we continue, by the way, if you are watching and you've watched to this point and this video has been beneficial to you so far, you can comment down below and tell me if there's anything you've learned, or if there's anything or any addition or subtraction you have on the video. As well, don't forget to subscribe on my YouTube channel so that you get updates anytime we post or we make a post. Okay, yeah, so let's continue. So here now you'll be able, you're supposed to take your buy limit there, and I've told you guys severally that you just have your stop loss at the low of this fair value gap candle, just about there. And then I've told you guys, because you're going to be targeting a fair value gap, the farthest fair value gap we can have here is this particular one right here, though small, but you can have this where we're going to be having our targets. Okay, because we don't want to also be over ambitious or something like that. Yeah, so we're gonna just target there. And you can see it's giving us a nice 4%. That's a very nice return on a single day, 4%. If you have 3 setups a week with the same risk reward ratio, that is going to give you 12%. Let's say on one day you do not make money, that is on 2 setups you made money, and then 1 setup you lost. That is going to be what, an 8% minus a 1%. You see, that's going to be about a 7% on a week on 3 setups. So that's a nice one. So yeah, and then now you'll have to be patient to wait and see price activate your order. Yeah, so this is actually I know there are people who could have feared and exited here. Price did not get inside or into the 50% of the fair value gap, so this is basically an inducement. It actually gives you more confidence on your setup. Yeah, and then you can see price activated our setup, and then we started pushing, came back the second time, and yeah, so that is how we hit our take profit on this particular setup. We had a similar setup, or we had another setup on was it on Wednesday, I am guessing. Yeah, it's here. This is the same another setup we had on Wednesday, and I think I explained this particular one on my TikTok. Yeah, you can go check out on my TikTok. I explained about this one, but I wanted to make a detailed video for this particular one, for the order that we had on Friday. But even for this one, no rocket science. Asian high, Asian low. For this particular one, we took the Asian high. The fair value gap is there. Take a trade from the fair value gap, and then that's just it. Yeah, I hope that video has been beneficial and helpful to you. If it has and you've learned anything, don't forget to comment, like, share this video. Don't also forget to subscribe on my YouTube channel for more educative content even in the future. Okay, yeah. If you have anything else or any other video idea that any questions that you might want me talking about here on my YouTube channel, make sure to comment down on this particular video so that I know on my next video what am I gonna talk about. Okay, yeah, so thank you for watching to this point. My name is George. I will see you on my next video. Don't forget, you are one trade away from your breakthrough. Keep going, keep the consistency, be disciplined, and it will all make sense. See you on my next video. Peace out, guys.